Yeah, we've prepared this presentation on supplementary budgets. So every year we have the budget being prepared, and in the course of the budget implementation, the budget may be revised once or even sometimes 3 times. So for the fiscal year 2025-2026, we have the first revision of the budget, which was reported this month. And we have analyzed these supplementary budgets, and we would like to share some of the insights that we've gathered in the course of our analysis. Yeah, so in terms of the outline, yeah, so we'll have a brief introduction, and then we'll look at the macroeconomic outlook, that is the macroeconomic conditions underpinning the changes or the revisions of the budget for 2025-2026. Then we'll briefly look at fiscal implications of these changes in the budget or revisions. And then my colleague Raphael will come in to look at the sectoral allocations. So we have 3 presenters, I should mention. I'll start. My colleague Faith will come in for the fiscal implications, and my colleague Raphael Muya will go last in terms of the the sectoral analysis. Yeah, so welcome. So I will begin with a small introduction. So as I've said, every year we undertake budget participation in the budget making process. We submit our comments to inform the allocations of the budget, not only just on the budget, on the expenditure numbers, but also in terms of the finance bill, the revenue side. Yeah. So then in terms of revisions, we have some legal provisions which guide these revisions of the budget. So, for example, we have some conditions that will require revisions of the budget. For example, we have emergencies, let's say COVID, emergencies like COVID, drought, even some extraneous conditions. For example, extreme flooding and whatever. So these conditions will necessitate revisions of the budget so that we can respond to these emergencies. Yeah. So remember, this should be some things that should not interfere or distort to a very large extent our opinions that we had put in the budget. Yeah. So, but then we'll be looking at under this financial period, 2025-2026, do we clearly see some of these emergencies that really necessitated revisions of the budget, or is it just due to poor planning? So remember, we undertake public participation, we give our opinions, but when the budget changes to a very extreme extent, you'll find it distorts what we had provided. It undermines public participation. Yeah. So some of the, for example, provisions of the budget necessitate that while we are changing the budget, both on the revenues, on the development side and the recurrent side, we should maintain the 30-70 threshold. That is, at least 30% of the budget should be on development, 70 should be on 70 should be on recurrent. And then within that, we also have fiscal responsibility threshold. For example, expenditure on wages should not exceed 35% of the revenues. Yeah. So also the overall change in the budget should not exceed 10% of the 10% of the budget. Yeah. So we'll be looking at all these conditions to see whether really it was justified to change the budget or not. Yeah. So briefly, in terms of the macroeconomic performance, what we can see is that, so in this chart, we have presented the performance in terms of sectors. And then on the extreme right, it is the projections for the whole year for 2025-2026 there. So in 2021, as you can see from the far left, there was a huge growth that is we were recovering from COVID 2020, where the growth was very low, and those growth is due to that recovery from very low base due to COVID. So as you can see in 2021, there the growth in Q2 was 10.3%. And in terms of contributions, as you can see across, the service sector contributes the most. So out of that 10.3, 7.8 is the contribution for service sector. 1.5 is the contribution for industry. And negative 0.3 was contribution for primary, which is mainly agriculture. So I would like us to look at the upper line, the black line. That is the overall quarterly growth. And as you can see, we moved from 10.3 in the far left, and we've been coming down. So currently, Q3, which is the most up-to-date, the actual numbers for growth is 4.9%. That is the general output of the economy is 4.9% in Q3. And it was 5% in Q2, 2025. And in Q1, 2025, it was 4.9. Yeah. So I wanted to illustrate this to show that really over time we've seen we've stagnated generally when it comes to economic performance. Maintaining economic performance of just around 5, it will take us a long time to aspire to be, whether you think of in terms of Singapore or just looking at our Vision 2030. Yeah. So in 2025 is projected at 5, and in 2026 is projected at 5.3. But then when you look at these growth rates vis-a-vis the growth in terms of expenditure, it is way too low. It is way too low. Yeah. So we can say this growth, in a nutshell, is not, the momentum is still low to ensure for us to meet the revenue targets that will help us finance our budget. Yeah. Okay. Let's look at the exchange rates. So mainly, when you look at our debt, for example, it is heavily denominated in terms of the US dollar. Around close to 70% of our debt is US dollar denominated. And some other important currencies include the euro. We trade mostly with the European countries, and also UK, the sterling pound. So in reference to the US dollar, the current exchange rate is 129.13 shillings per $1. That is according to the central bank data. For euro, it is exchanging at 151 shillings for €1. Sterling is 172. Yeah. Now, we looked at this chart, and there is one very interesting piece that we can note. When you look at the US dollar in particular, you find it's almost a straight line. The bottom line is a straight line, and that denotes something. It is when you ask economists and they see this picture to just give their view, they'll tell you this is very strange. The exchange rate does not usually behave like this, does not assume a straight line the way we've seen. So what we have noted is that this behavior aligns to an exchange rate that is managed. So there is an intervention by the authorities, that is central bank, to keep the exchange rate at 129. Yeah. So it's unusual because officially Kenya is a free floating or operates a free floating exchange rate regime, and yet we can see this. Yeah. But then, as economists, we know that you cannot defend the dollar forever. You cannot defend the exchange rate forever. It will reach at a point when, because of it's contradicting with our official stand, that is free floating exchange rate regime, it reach at a point whereby you'll have to readjust the exchange rate, and that will cause a shock to the economy. Yeah. So suppressed volatility. So the reason why they're keeping at 129 is to suppress volatility, and because of its impact on the debt servicing, especially external debt. Yeah. But then we're saying a suppressed volatility is actually not stability. It's actually postponed instability, especially when we have a shock. And we have authorities, for example, the IMF, that have also noted the unusual behavior of our exchange rate, and are calling on authorities to relook into this exchange rate. Yeah. So another thing is that while we are so much focused on maintaining the stability of exchange rate because of the forex risk with regards to the debt repayment, there are other negative or adverse effects of this pegging of this US dollar. For example, it makes our exports not to be competitive. You can think of it in terms of tourism or FDI. When an investor, external investor, looks at, for example, within East Africa and finds Kenya having maintained a strong currency, they may go or prefer another country. So you'll find instead of foreign direct investment coming to Kenya, you find it shifting to another country or tourism. Yeah. So that is some other effects that may be caused due to this. Then I would also like us to look at the interest rates and the inflation dynamics and how it impacts, especially on the cost of living. So in a nutshell, what we have observed is that while the central bank rate, which is the green line, and the red line is the 91-day treasury bill, and the yellow line is the inflation rate. So what we've noted is that while this central bank rate has been coming down from around mid, that is end of 2024, it has been coming down, we can still see it is still high. It is still high. So when it is 9%, for example, the central bank rate, it raises opportunity costs. That is, it means that the loans, so this has an effect on the loans that you borrow from the bank. When it is raised so much like that, you find the banks will lend at a very high interest rates, and it affects the rate of domestic, the access of credit by the SMEs in the domestic market. So when you approach a bank to borrow a loan, the bank will be lending you at a very high interest rate. That raises the cost of investment or cost of borrowing. When the cost of borrowing is very high, you'll find that generally the cost of production, investment, ability to expand your business become very costly, and you are likely to scale down. So that has an effect in terms of inhibiting creation of jobs and whatever. So because of that effect, you find this is called tightening of the monetary policy. The interest rate is so high, it's affecting access to domestic credit, and it's affecting investment, which affects jobs. So our view is that it should drop further. It should drop further so that we improve in terms of access. So in as much as inflation has dipped because of demand, because the demand was suppressed. Actually, demand is suppressed. Demand is suppressed in that people are not able to access enough credit to expand their business, to demand more goods and services like that. Yeah, yeah. But it's not because the cost of production is low. Yeah, so that should not mislead us in terms of saying inflation is low. It's just because our demand for goods and services or investment is still low. Yeah. Yeah, previously I talked about supplementary budgets. That in some cases we can see that the government or national treasury is revising the budgets even up to a frequency of 3 times. Like, for example, as it was the case in 2024-2025, they revised 3 times. As you can see in this table, in the middle there, we can see supplementary 1, supplementary 2, and 3. Now, we notice something very peculiar. When you trace all these revisions on the budget, tracing both in terms of the revenue side and expenditure side, we notice that while revenue almost remains stagnant or change very little, we found that expenditure has been rising with a very huge margin. For instance, the initial deficit, pre-deficit in June 2024, after the protest, was the budget was 3.9 or almost 4 trillion. Revenue was 3.3. The deficit was 650, almost 50 billion. Now, after the protest, the expenditure went down, was revised from 3.9 to 3.8 trillion. But then after these revisions, which were done around August, after this revision, we find the budget being revised again upward. To 4 trillion, and then eventually to 4.05 trillion. Yeah. So as you look down the last line, you can see the deficit has ballooned from 649. It has gone all the way to 1 trillion, more than a trillion. And when you follow in terms of the context in which these revisions were happening, you can notice that after the Gen Z protests in June, we can say public participation was very high. People were very alert. So it caused the budget to scale down the expenditure. But then in the duration, the course of the budget implementation, we find the expenditure being revised again upward. So that is something that we should take note of. That as we withdraw, let's say, from public participation, we find the government finding a way to increase the budgets, yeah, and causing a lot of budget deficits. Now, in this year, that is the last 3 columns, 2025, 2026, printed estimates are the original estimates that were approved by the parliament. So in terms of deficit was 1 trillion, the expenditure was 4.3, and total revenue was 3.3. Now, in this current supplementary 1, we've seen an increase in the budget, but not so much increase in terms of revenue. So the implication there is the deficit has increased. Yeah. So why? So generally, from theoretical standpoint, frequent revisions of the budget will point out to unrealistic revenue forecasting, that maybe you're not able to meet the revenue, and then you or just poor planning. You are increasing the revenue while you know you not meet the sorry, you are increasing the expenditure of the budget while you know you not meet the revenue targets. And I think that's what is happening here. So there is weak macroeconomic assumptions and generally weak cash flow planning. Yeah. So we've seen widening of the budget deficit, and we think this is a classic example of deepening fiscal slippage. Yeah, we are not able to maintain the fiscal consolidation plan as we had planned for. Then we can see that supplementary budgets have become the norm. And then this raises a question in terms of the quality of public participation, and because it can become an illusion. Yeah. Now, lastly, allow me to go through the budget outturn. Budget outturn is an overall picture of how the budget looks like. looking at the revenue side, that's the top row, revenue, that's part A. Then the expenditure, that's part B. And then we have some component called non-discretionary, that's D. Yeah, so non-discretionary is part of the budget that is almost fixed, as in you don't have a maneuver, you don't have room to maneuver. So the Constitution of Kenya provides that among the first charges on the account, that is things that you should pay first before you think of other things, is our debt. Our debt is in an account called Consolidated Fund Services. So we have interest on the loans that are maturing, both domestic and external. We have redemption, that is the principal component of debt that is maturing. Then pensions and other items, for example, salaries and allowances, salaries to the governors, president, and all that. Yeah. So the other part then is called discretionary. You have enough room to move around. So we can see in a nutshell that the overall budget as shown under E, total GOK, GOK means includes county, it is 4.6, around 4.7. So the current budget is around 4.7 trillion. And it's moving from 4.3 trillion. So it's an increase of about 300 billion, and it's causing a deficit of about 1.3 trillion. This is huge. And this, the reason why we have an increase in the budget deficit is because the revenue has not matched the growth in the expenditure. That's why you see an increase of about 300 billion in our deficits. Yeah. Yeah, I would also like to mention that a lot of money is going towards repayment of debt. So you can see line D2 and D3. So the largest component of CFS is currently 2.58 trillion. So it means before you pay for this, before you start, before the government starts spending this 4.6, 2.5, that is consolidated fund services, has to be repaid. So that's huge, more than 50%. It means our budget is not that flexible. Now, out of that, we can see interest. Interest is around 1.1 trillion, and redemption is about 1.2 trillion. So the huge increase was in terms of redemption. And this is the case for the reason for this is the Eurobond that was repaid around September. So Honorable Badi mentioned that we had a Eurobond that was maturing, and the government decided to buy back this Eurobond. That's why you can see in the course of that, that's called liability management, and that's why you can see a huge increase in the redemption. Yeah. Yeah. So generally, we can see that the increase in the interest rate, for example, to 1.1 trillion, and also the refinancing, which has also increased. For example, net domestic financing, that is F2, has moved from 614 billion to 690 billion. This has huge implications in terms of our access to domestic credit, or to credit within the domestic bank. And this is likely to affect the SMEs. So in a nutshell, I think these are just some of the items that we need to be aware in the course of the budget revisions here and there, so that we need to ask the government to stay to its promises that it made during the budget participation when we had active engagements with government. Yeah. And at this juncture, I would like to invite my colleague, Faith, who will take us through the fiscal implications.
Thank you, Noah. I'll take you through this section on fiscal implications. And first off, we'll start with the looking at how budget has been implemented for the first period or the first half of this financial year.
First, we look at the performance for the first half of the year, that is for the period ending December 2025. And as Noah has indicated earlier, we are seeing some budget credibility issues, that is, revenues are falling short and expenditure is increasing. For instance, the target for the first half for revenue, total revenue was around 1.6 trillion, and the actual revenue collection for the period was around 1.5 trillion, and hence we have a revenue shortfall of around 136 billion. And this, as you can see, ordinary revenue is leading in this with a shortfall of around 115 billion. This is the tax revenue. So here we can see that tax revenue underperformed in the first half of the year. On the expenditure side, the total expenditure was below target, but we've seen, and this is because development and counties underspent, but the recurrent part of the expenditure was on the higher side, as we are seeing here, which increased from 1.541 trillion to around 1.552. That is an increase of around 11 billion. So if expenditure on the higher side and revenues are on the lower side, we have it results to a fiscal deficit, expansion of the fiscal deficit. And here, deficit has expanded by around 64 billion. If deficit is growing, it means you need to borrow more. And hence, financing or the borrowing expanded by around 75 billion for the first half of the year. And here, on the external side, we are expecting to repay around 43 billion shilling, but towards the end of the year, we ended up borrowing 8 billion more, which led to an increase of 51 billion shilling, while on the domestic side, the increase was around 24 billion. So generally, fiscal deficit is expanding and expanded for the first half, and borrowing also increased. We look at the CFS. Noah touched a bit on this, but we expound more on how the CFS has changed with the supplementary revisions in the supplementary estimates. Generally, total CFS has increased, and this initially in the in the beginning of the year, the estimates were around 2.1 trillion for the CFS, but these revisions has led to the CFS to grow by around 2.5 trillion. That is an increase of around 20.7%. That is around 443 billion. And the biggest culprit here is the domestic, the public debt servicing, both interest payments and the redemption items. For instance, for interest payments, it's only the domestic interest that increased, and it increased from around 851 billion to around 883 billion shilling, and this led to a percentage change of around 3.8%. But the redemptions here, we have seen redemption expanding exponentially. For instance, it doubled for external redemption or the external debt repayments, principal debt repayments. It increased from around 340 billion to around 673. This is a net change of around 98.1 billion. And as Noah had indicated earlier, is that because of two things. One, government is doing what they call a liability management strategy, that is trying to buy back the 2018 bonds that was supposed to mature in 2028. So they bought it back, and this increased this redemption. On the domestic interest, repayment, sorry, domestic debt repayment, principal repayment, this increased because of an repayment of an infrastructure bond that is falling due in June of this year. So they have budgeted to repay it in June, and hence the increase in the domestic debt repayment. So overall, CFS has grown, including the salaries and allowances of the state officers like president and the chairpersons of commission. We'll see this in the next slide, how this has changed. Next is you see look at the implication of this increase on ordinary revenue. On the first, these two bar graphs, they show how the estimates were of CSS in relation to the ordinary revenue. And the first one is on debt service as a percentage of revenue. Initially, it was estimated at around 65.8%. It was estimated to take up around 65.8% of ordinary revenue. Ordinary revenue is just tax revenue. And the overall CFS was estimated to take up around 74% of ordinary revenue. But with the revision on the supplementary estimate, this has gone up, both domestic debt service and the overall, that's the CSS. The debt has gone up by around 15% to 81.2. So debt service is expected to take up around 81% of the ordinary revenue, while CSS will take up around 90%. So total budget is becoming increasingly rigid, and this might result to crowding out of spending towards other critical sectors like health and education. Next, we look at the salaries and allowances item, and here we decompose this into the specific items. For instance, the highest increase with the supplementary revision was for the salaries and allowances for the chairperson and commissioners for IEBC, the National Land Commission, and the Public Service Commission. For IEBC, it had the highest increase of around 38%, followed by National Land Commission at 29%, while PSC salaries for the commissioners and the chairperson is around 16, so an increase of around 16%. For all this commission, we observed an appointment of commissioners in these specific commissions, and hence we could attribute the increase to this appointment of these commissioners. The Kenya National Commission on Human Rights is the only docket that had a decline in the budget, and this decline is around 26% decline. Although the salaries and allowances did not change, what they removed was something called gratuity payment. So the salaries remain the same. Next, you look at public debt, and this is as at today from the IEA debt counter. Public debt is a public debt stock. Total public debt stock for Kenya is around 12.388 trillion, with domestic debt being higher than the external debt, as we've seen in the previous slide that we are borrowing from the domestic debt is higher and is still increasing compared to the external. We are repaying the external, but we're borrowing more from the domestic. From the debt. We are also going to look at briefly on the debt profile, on the composition as well as risk indicators, cost and risk indicators. On external debt composition, The external debt, the highest composition is from the multilateral, particularly from our debt from World Bank and the IMF, which is around 55.5% of the total external debt, followed by bilateral debt. And the highest on this bilateral debt is the Chinese loan. Then we have an increase in the Eurobond loan, and hence while our external debt is also becoming a bit expensive. On the domestic side, the domestic debt is we heavily borrow from, of course, treasury bills and bonds, and the bonds are take up around 80.1% of the total domestic debt, followed by treasury bills. And this is why expensive. The interest rate at which we bought the treasury bills is slightly higher than treasury bills. Sorry, treasury bonds is slightly higher but carry we observe that our debt is increasingly becoming expensive, and as well as an increase in the refinancing risk. And on the cost, we noted that the interest payment as a percentage of it is going up, and the comparison was calendar years. External debt, domestic payments, we noted that it increased to around 4.5% of GDP, although it is lower than it's higher than the external interest payments. Another aspect of increase in cost is the increase in the weighted average, that is generally the cost of the debt. And the domestic debt is very expensive, as we are seeing here, and the weighted average interest is around 13% compared to the external one, which is around 3.9%. So generally, our external debt, we can say, is still slightly cheaper than the domestic one, but we've seen an increase in the cost of the external one. But domestic debt is still very expensive. Finally, we've seen also an increase in the refinancing risk, which of course has implication on the spending side. And here, the average time to maturity, that is the ATM, has reduced in these 2 years. Here, we've seen for the domestic debt, it reduced 6 to 6.4 in 2025, and the one reduced from 9.5 to 9.4 in 2025. ATM is generally the average length of time that a borrower is expected to repay the principal the principal of the loans that they had borrowed. And therefore, if it's reducing, it means there is increased fiscal pressure to repay this debt. And this could have implication on the spending on other sectors. And the debt maturing in 1 year, as a percentage of the total, also increased. For the domestic, it increased to 20.5, while the external increased to 6.5 from 5.2. And so our debt is becoming very expensive, and we are required to pay the debt within a very short period of time. Yeah, that's it. That's right.
Noah and Faith have actually taken us through the macroeconomic section and the physical implication about the revisions of the budget. But I mentioned that one of the things that Noah mentioned was on the physical and legal and physical legal requirements about the budget assumptions that are always put in place. Once we are not in line with what is in the assumptions, then the National Treasury actually is given that mandate to come up with a supplementary budget so that they are able to continue with their projected implementation of the budget, in making sure that payments, our constitutional payments are done on time, and therefore perhaps the reason why we are having this revision. Just to mention is that this the budget implementation for 2025-2026 is in the third quarter, and the supplementary budget by the National Treasury was issued, I think, 2 weeks ago, and it is in the third quarter. I know previously we have had like 3 supplementaries, but this particular budget, supplementary budget, the vision was up to 316 billion shillings. And the component of 316 billion shillings is we have 287 billion shillings for MDS, those are ministries, departments, and agencies. And then we have the consolidated fund services constituting around 29.3 billion shillings, a total of 316 billion. And what it tells you again is that it's an expansionary supplementary budget, because we are more of increasing in terms of what we need to expend from on the sectors, but also as Faith mentioned, in terms of what we are paying out to our commissioners. Those are the constitutional office holders. Number two, and we also need to mention this, is that if you look at the various components that we have in terms of budget increases, you realize that there are increases in terms of security, defense, education, and what it tells you is that even as the government look at the better economic transformation agenda, it is focusing more on issues to do with national stability, human capital development, and of course trying to improve the various models that we have even in the education sector. And then looking at the social sectors, we have components like the social protection, where we have allocation toward capitations, and issues to do with drought mitigations and human support. And all these are geared toward ensuring that we caution the vulnerable population in the economy. And of course, it's a question of trying to address the shocks that we may have as a country. Now, going to the next one, is that what we have done is that we have tried to look at the numbers as they are in the supplementary budget. And one of the things that we have done is to look at the nominal numbers in terms of sector-wise. And we all know that we have 10 sectors, as reflected in the presentation, starting from the environment, social protection, national security, all the way to the agriculture sector. And what we have done is that there was an approved budget, and then we have a supplementary budget. So what we have done here is to look at out of what was allocated, how much have the supplementary budget shifted beyond what was approved. And what you realize is that overall, in terms of numbers, if you have to pick the numbers, because we have this chart in another Excel sheet, is that you realize in terms of numbers is that the education sector is the one which has received the highest proportion of allocation, with around 48 GP that has been allocated. But if you look in terms of share across the sectors, what you realize is that in terms of sectors is that the general and economic affairs has actually received the highest proportion of around 29%, followed closely by the Ministry of Health as a sector, and then public administration. I need to mention something to do with the general and economic affairs, which are some of the ministries that constitutes the general and economic affairs. You realize the East African Community, Ministry of Mining, Ministry of Cooperative, Ministry of medium, small and medium enterprises, all this, meaning that the government, in terms of realigning priorities, it will focus more on the general economic and commercial affairs. And In terms of education, and I mentioned, if you look nominal numbers, the shift from what was approved vis-a-vis what has been approved or suggested in the supplementary budget. I said it's around billion shillings. But in terms of share compared that figure of 14 billion vis-a-vis what was the sector allocation, you can see the share is around 7%. So it tells you where is the shift in terms of the supplementary budget. It tells you that we have some which is going to general economic affairs, public administration, and I have to say public administration include the office of the president, the deputy president. We have the national treasury. All those fall under the public administration, and of course the sector on the environment, where we have some allocations toward environmental and addressing the issues of environment because of climate change. So looking at a high level, those are some of the shifts that we have seen in the supplementary budget. Number two, we have gone ahead to look at which are the sectors, which are the sectors that have received sorry, something have gone. Looking at the ministries, department, and agencies that have received actually the highest increases, and we have some the first 10 which have got, and in terms of percentages, the department that has received the highest is actually and the shift was from around 8.7 billion to around 17 billion shillings, followed again by the executive office of the deputy president. Again, the allocation is estimated to be around 6%. What we are speaking to, or what we need to address in terms of these percentages, is to ask ourselves, is there any coordination in terms of between the National Treasury and the various ministries, how things that these particular increases in the departments are aligned to the national priorities. And then, of course, we have had a look at the MDAs, which have got those are the ministries, departments, and agencies which have gotten the largest expenditure cuts as a share of the supplementary budget. Again, in terms of the specific department, we have seen the ICT and digital economy is the one which is actually receiving the highest cut, followed by energy. And then the question we are asking ourselves in terms of priorities is that Kenya economy should be moving toward to buy more of the ICT sector in terms of trying to harmonize even our tax collection, trying to buy more the ICT and digital economy. But what we have seen in terms of the implementation of the budget of 2025-2026, what we have seen is that there are some cuts with regard to the sector, most likely the drivers of the economy, and slight cuts toward the sensitive sectors, for example, gender and affirmative section, children's services. These are the social protection sectors. So those are some of the things that we see in terms of some expenditure cut at a high level. And therefore, what are some of the takeaways that we, of the emerging issues we have seen from the sector allocation? And one of the things that we have noted is that there are some significant spending increases in key sectors, and therefore what it tells you is that there is a policy shift toward looking at the allocation toward the road sector expansion. And these are some of the items which we normally say that they put some expenditure pressure, particularly when you're talking about the allocation towards supplementary budget. And then variation at the state department level, and They are quite, they are, and what we need to, when we talk about variation, we are talking about some sectors receiving almost 100%. And I mentioned in the previous slide, for example, if you check toward uh, deputy presidency, has had quite a huge variation in terms of increased state house department, and then in terms of reduction, we have seen some reduction in the ICT sector. So those are some of the things that we need actually to share with the Budget and Appropriation Committee as they go through the supplementary budgets. And then in terms of there is reduction in specific department despite a growth. And what we have seen is particularly in the public administration sector, where we see terms of shift for the National Treasury having an increase in their budget, in their supplementary budget of around 26 billion. But again, if you check in terms of the overall sector increase, it does not reflect much in terms of how it has grown. And we have seen in the previous slide that the GECA, the General Economic and Commercial Affairs, is the one which is leading in terms of sector growth. And then social protection intervention, we have seen some allocation, and what we are suggesting here is that we have had quite a number of allocations toward the various funds in the name of social protection departments. The department concerned to have a better coordination so that we can be able to serve the capitations or even the in a more better way. And then we have also seen some emphasis in terms of our allocations toward environment and climate-related functions, which we think that one is the behalf of Noah and Faith. Is that what we are saying is that whenever we have a supplementary budget, it must be seen to strengthen priority sectors. And we know that whenever we have a supplementary budget, it means that we have pressures in terms of the various sectors or some gaps, and therefore we must be seen to strengthen the sectors. For example, I don't see the reason why we are having a huge reduction of 4 billion shillings toward ICT, and we are moving toward the digital economy. That's something that we need to address. Number two is that we need to ensure that whenever we have supplementary budgets, particularly for MDAs, we need to enhance our level, the MDA's budget rationalization and justification. Whenever we see 100% shift toward a particular department, and mostly of those resources, you see, if you go to the line item, most of those resources will be given to conferences and allowances. It raises the question, and therefore, whenever we have those, we need to have a clear justification as a country in terms of where our shilling is going. So, social protection is another thing, the expenditure, and again, I have to insist that we need to have a better coordination about resources which goes to the social protection, affirmative action funds, and all that. Better coordination between ministries so that we see we can be able to improve enhance our services to us. And then in terms of growth towards growth in the various sectors, the 10 sectors that I mentioned, we need to have a strengthen the monitoring of high growth sectors. Allocations, even the approved budget, we have got better allocations to a particular sector, but come this year, you see some changes here and there, and therefore you question the issue of how we make our priorities in terms of how we need to move as a sector. The other thing, and which was covered very well by my colleague Noah, is on the question of physical discipline. What we are seeing over time is that our revenue we have had some issues in terms of our revenue correction. We are not meeting targets, and therefore, what we have seen is that in terms of expenditure, it is rising faster than what we can be able to correct. And therefore, raising the whole question of how we can be able to ensure that we are covering the cost of our citizens. And therefore, we need to have a fiscal discipline as a country. And what we have proposed in the previous comments or in the previous comments is that we should have realistic revenue forecasting by the National Treasury, where we are very sure that we are going to collect 2 shillings. And therefore, when we come up with budget, we make sure that we are spending on 2 shillings. Number two is on the other point that we need to mention is on the whole question. Whenever you see a supplementary budget, it undermines about our budget credibility. And therefore, the whole question of accountability. Budget revisions, you even question the reason why we normally have public participation. As a country, we have moved a bit better in terms of public participation because the Budget and Appropriation Committee, together with the Finance Committee, have had quite a number of times requested institutions and CSOs to share their public views on the budget. And the continuity of having revisions on the budget, particularly when you're looking at the recurrent side, because it affects the recurrent side. And Phil has shared in terms of our constitutional office holders, they have to be paid. There are some pensioners that started their job in the month of September, and therefore we raise the question of rising wage bill. These are something that we need to put into focus. The other aspect is the debt service. Debt service, Noah has shared with us the outstanding, and what it tells us is that looking at the primary balance is that we will still continue to borrow even in this third quarter because it shows a deficit of around 175 billion shillings. And primary balance tells you how the government will be able, whether it tells you whether the government is able to implement its budget without borrowing, and it is servicing its interest rate. That's what it tells you. So if we have some primary balance, it means the government, as we have seen and we have seen from the numbers, is that it is we are borrowing more from the local rather than the external, and therefore what we are doing is to push out investors. That is crowding out services for medium more enterprises, and therefore we need to address that issue. And then weak economic growth. The projection EPS tells us our growth is projected at 5 in the fourth quarter. In the fourth quarter, yeah, the coming quarter is projected at 5%, but currently it's at 4.9%, and therefore we need to have, if we need even to make sure that we have revenues that are able to cover even our debt, then we need to have a strong economy that will be able to conduct these activities and therefore being able to correct the required revenues. And therefore, weak economic growth will hurt budget execution, and therefore we are saying that we need again to have realistic numbers that will not don't disrupt the services that we need to give to the people. And I think the presentation ends there, and I now switch back to Noah so that we can go to the plenary session. Thanks.
Yeah, thank you, Raphael. And thanks for all the participants for listening to us. Now we go into plenary, and you can use the chatbot to ask your question to any of the three presenters, Raphael, Faith, and me. Yeah, so yeah, you have an opportunity, or you can even raise your hand to ask the question. Yeah, welcome. Jairus is asking, first presenter indicated that there are justifiable reasons for budget revision. What are some of the justifications for this revision? Yeah, that is the first question. And so I will respond. Yes, we have some reasons that justify budget revision. Yes, we have some reasons that justify budget revision. And I give an example. For example, during COVID, in times of COVID, for example, is a time when we have, it's an extraordinary situation where, for example, because of the containment measures, it has a huge implication in terms of revenue mobilization. Yeah. So we expect a shock on the revenue stream. Then, so in that circumstances, you'll find that we will not be able to raise enough revenue to spend as usual. So it forces the government to scale down in terms of the budget on one hand and also on the revenue. For example, in COVID, we have some taxes that were waived. For example, VAT on basic commodities. We also had the payee for those who are earning below the payee was waived. So all those tax measures have an implication on the overall tax. Then we have some situations when you have, let's say, war, for example. During times of war, we have some budgets that are shifted to certain critical areas, let's say military or whatever, or intelligence. So in that circumstances, because it's an extraordinary circumstance, it requires then a significant budget revision. But the point here that you are trying to say is, for the case of Kenya, the revisions are far too many. In 2024-2025, we had 3 supplementary budgets, 3. We expect at most we should have 1. Now, and yet we are trying to say that in 2024 we do not have that drastic change of that you can call emergence or whatever. We do not have that kind of situation. So we can say it points to weak macroeconomic assumptions in terms of economic performance. It also points to just purely lack of proper planning. But another thing that we can also note, even in this financial, in this supplementary one, we can also note one thing in that the change in the budget is too wide. We are talking about more than 300 revision of the budget upward. And in most cases, it's happening on the recurrent side. That is not an accident. That is intentional. And also, when you trace the budget in terms of the deficit, the budget deficit, the gap between expenditure and revenue, you'll find that it is that you cannot say it's an accident. So to some extent, it's a political economy question why the government will have a tendency to maintain a huge budget deficit when we don't have emergency, and also why you should have so many revisions upward to around 3. Yeah, and also some of the revisions come way too late in the course of the financial period. Yeah, so that's what we are trying to question. That's pointing towards poor budget planning, and also to some extent there is some incentives towards just having more budget revision and redirecting the budget towards the recurrent spending, allowance, which mostly contains wages and allowances on the allowances for, and in some cases, as Faith pointed out, reports by the Office of the Controller of Budget have also pointed out expenditure on issues such as domestic travel, which we think are not really of high priority, especially during this time when we have when the government should be pursuing the fiscal consolidation plan. Yeah. Another question:
please feel free to post your question or raise your hand to ask the question. Yeah. So I don't see any question or any hand raised. So I would like us to make conclusion, just to give our closing remarks. And so I will begin. So in mapping the macroeconomic conditions, our conclusion is that the economy is not growing fast enough to raise sufficient revenues to meet our overall budget expenditure items. The second point that we have also noted is that there is too many revisions of the budget, and it points towards poor macroeconomic assumptions, poor planning. So another thing is it is distorting the initial suggestions that we had made during the public participation period when the budget came us for public participation. So that undermines the constitutional provision, Article 10 of the Constitution, which provides for in meaningful public participation. Yeah. Another thing is there is risk in terms of access or refinancing of the budget. So we find there is an increase towards domestic borrowing of the cash of the funds refinancing the budget. So this increased borrowing from the domestic market, it is something that is also causing adverse implications when it comes to expansion of jobs, for example, when it comes to SMEs, because SMEs need to access this loan for them to expand their business, to create more jobs and whatever. But I think we need to rethink in terms of lowering the central bank rate so that it can have a ripple effect in the banks, commercial banks, lowering the rate at which they lend out to SMEs. And in that way, we think the economy, it will be able to spur growth in terms of expansion in investment of these small and medium enterprises. So I think in a nutshell, we can say it is a call for us to be aware of these budget revisions that happen frequently. We have some, it's a period when we have some items that get sneaked into the budget, which are not of high priority. So we need to be aware and highlight these issues to have meaningful engagement with the policymakers. Yeah, thank you. I would like to invite my colleague Faith to make her final remarks.
Yes, thanks, Noah. Mine is to emphasize on the importance of improving on the budget estimation, particularly by the budget institutions, because we've seen some items that are cropping up in the supplementary could have been factored in the initial budget, because we had anticipated to spend on these items. And secondly, to add on to what you said, yes, we need to cap on domestic borrowing, and also the external borrowing, which is on the expensive side. Yeah, thanks.
Yes, Rafael?
Let me make my final remarks. And first, I want to mention it's a question that I think, Noah, you have addressed it adequately, but I also need to add one thing. And Jailas was asking about the justifiable reasons why for budget revisions. I think one of them, and you mentioned it very clearly, is that we do normally have some legal and physical responsibility requirement that whenever we have some budget revisions shifting significantly, then the National Treasury is actually required to table some supplementary budgets estimates to ensure that the ongoing projects remain funded. And of course, the government operation should continue undisrupted. And therefore, those are some of the things that we normally check when you're talking about whenever the National Treasury issues supplementary budgets. But number two is that it is very important for all of us. Whenever there is an issue, whenever the National Treasury shares the supplementary budget, it is very important for us to check the numbers properly to see the shifts in the various MDAs, but also looking at the cost in the public, in the debt component to see which component is being affected more. Is it on the redemption or is it on the interest rate? So some of those things are important for engagement with the policymakers so that we can be able to share our concerns and our issues properly.